Hey, welcome to another installment of Chartered from Going Elliptic. I'm Paul, and this is Shanky, and we're here to really give you some not investment advice, but analytics of the markets and where we're seeing things going. And yeah, we've called this episode kind of Correction Continued, because it really does pick up from where we were last week. Hey, Shanky.
Hey, Paul, how are you doing?
Good. And yeah, it's nice to see lots of viewers tuning in live as well. I mean, that's a big part of the show, right?
Absolutely. Yeah. And we encourage our listeners to ask us questions. As you said, and appropriately fumbled, I think a lot of people in the crypto world try to make it like investment advice and give very strong opinions. We are not one of them. We are here to essentially analyze the markets, right? Use the data, look at the markets, and share what we are learning. That's the focus here. Do not take anything we say as investment advice. Do your own research. Of course, if you want to take our own analysis and dig in further, feel free to. And just use this as a piece of information that could at least lead you the right way to start thinking the market in more analytical terms, to look at data in a more objective way rather than just be driven by emotions.
Yeah, that's really important. Definitely something I've been learning a lot more as we've been going on this journey. And yeah, equally important when the market's so volatile. So what are some of the assets that we're going to look at today?
Yeah, I think, the correction, as you rightly mentioned, is continued, right? So that is the negative momentum is building. There's a lot of confusion. There's a lot of fear in the market. Given that, it does make sense to start with the majors as usual. They are the leaders of the pack. Let's see what's happening with market structure and price action for both BTC and for ETH. We also will bring in some of the other narratives that have been building online just to see how that may be impacting. And then we can jump in and look at a few alts. We can look at some of the usual suspect ETH challenges we had looked at in the past. There was a request to look at Axis, AXS, so we'll pick that up as well. That's an NFT token, so maybe we can give a quick look at NFT tokens as well if time permits. The idea, though, is not to necessarily walk through every single token, but give a good sense of how to read the market. The market is very correlated as well, right? So it may not even help that much go every single token because the story might look very identical.
Yeah, and definitely we've seen that in previous weeks, whether it was being Bitcoin leading or Ethereum leading, it really did set the trend for the overall market. And we're not seeing that alt season kind of narrative that people like to think about when, say, the bull market slows down on those majors.
Yeah, totally. And that's another bit, I think we'll touch upon it when we look at BTC and ETH, that the markets are slightly different than previous bull runs this time. And a lot of online analysts and the crypto Twitter and influencers have been trying to force fit models from 2013 and 2017. And while there are things to learn from it, I don't think it's a exact fit this time. It's a slightly different market. So we should definitely look at that as well.
Yeah, definitely. All right, let's jump in then and look at the majors.
Excellent. Yeah. So the story, as always, starts with BTC. First thing to look at is, last couple of days have been a big downer, right? We saw a bunch of red candles, one after the other. So, if you zone in a little bit more and you start looking at 27th, 28th, and then 29th, basically back to back, we saw a bunch of red candles. I don't think anyone was really surprised with these red candles, but it's always disheartening when investors come in and expect the market to kind of somehow correct in a magical way, and then it doesn't happen, right? And it continues its wobbly journey, if you may. So that's what we've seen. I think we mentioned this previous week, and we've been talking about this actually for the last few weeks now, that there are a few points where BTC seems to be struggling. We saw that early on when we had built a similar box around the 60K level. And BTC tried a few times early on in Feb, and then got super close to it in March, got again in April, and then again one more last time in May, and then just couldn't hold it, right? And of course this March and April ones were the closest, and then it started its downward journey with those massive few dips that we saw early on, right? Starting May 12th, and a few other dips beyond that. Of course, the one that got really everybody into that fear mode was the 19th one, right? Which really took it all the way down to 30,000, right? A number that we had predicted, a number that we had looked at and mentioned. We weren't stargazing, let's let our listeners know. We have absolutely no superpowers of that form. But I think when we looked at market data, it was pretty evident that those were levels that Bitcoin might test, because that was really a level of support, right? So if you go back near the 30K, there is a level of support. Similarly, there is a level of support around 23K, and if the market continues to remain jittery as it is, won't be surprised if we go back to the next level of support, which is around 23K. That will get tested. So that's really like the sort of higher level theme here. The other point to consider is that the 40K is the new 60K. So we might see Bitcoin struggle a little bit around 40K. And there has been a couple of attempts. One, of course, as it was diving down, it tried to pull back up the very next day. Didn't quite do anything. A few days later, there were some attempts around here, around 26th. And in fact, that attempt is what really accelerated the downward journey. Now, for those who have been analyzing the markets and who are sort of chartists, if you may, or who look at technicals, it is no surprise. And why it is no surprise is because what is really the price action? If you start digging a little deeper into it, price action is nothing but the market price that buyers and sellers determine, right? And you could also look at it from a standpoint of bulls and bears, right? So the bulls tried to pick it up. I mean, they put in whatever they could. They bought and took the price up until this point. But ultimately, if there isn't enough buying momentum, or there aren't enough of those bulls or buyers or the buy side pressure, then the sell side kicks in for multiple reasons. Either because they don't like that price point, they feel it's too overvalued, or they feel look for a nice opportunity to make some money, make some profit, and so they start taking profits, and then it just falls all the way down, right?
Yeah, and with that kind of fear side of things, fearing like, okay, if I don't exit out of the position now, then I might miss the opportunity to buy in at a lower low. So yeah, there's a lot of psychology there, definitely working against the bulls.
Totally, yeah, absolutely. So that's what's happening purely from a data standpoint. And then the other part of the puzzle here that one must look at is that most traders who are even marginally bullish, they would like to see evidence before they commit a lot of capital to that bullish trend, right? And so if you look at the larger trend, it doesn't seem to be in that direction. We saw the prices fall below EMA 200. In fact, there's not only likelihood, but almost certainty and when I say certainty, more probabilistically, a very high chance that we'll see basically the death cross, right? And a death cross is essentially when EMA 50 is going to go under EMA 200, right? So which just sort of says that the market is getting into super bearish territory, right? The reverse of a death cross is a golden cross. So these are just, of course, terms that are thrown out there, but when the market is the other way around, right? The EMAs cross over in the other direction, and this is cross under, right? So this is the death cross. So I think that is likely to happen. I don't feel the death cross will really do anything in terms of price action tangibly, but what it would do is it would confirm the pessimists and it would confirm the bears, right? So anybody who's sitting on the sidelines would just see that confirmation and get a little more scared, right? So that's what might may happen, right? And I think that where it will happen is look at this, right? This is 50, this is 200. 50 is converging down rapidly because the prices are down. I would think somewhere around between 8th and 15th of June, somewhere here, unless of course market reacts violently and we start seeing massive candles, either red or green, we are likely to see it somewhere here where the death cross occurs, right? Which is basically end of next week. So next weekend, we should be very close to it, right? And so,
Okay.
exactly, yeah. So if the negative momentum continues through next week, and we also get closer to death cross, I think that'll just sink the emotional capacity of traders a bit further down, right? That's really what is going to happen. Of course, things could change. There could be a sudden change, some big news, a positive energy from somewhere that is going to come in, and that might possibly sort of push it back up. But unless that happens, I think this is already in motion, right? There is inertia in its favor at the moment. So stopping it is going to be hard unless some, big force comes against it, is essentially how we see it.
Yeah, and I can't even think off the top of my mind what a big enough positive kind of news would be. I mean, we could say China, isn't banning Bitcoin mining, or, hey, there is another government or favorable regulatory move, but I don't think that would be enough to send it back bullish.
Right. Exactly. Yeah, 100%. And I think there has been plenty of those that have been building up where at least there is an attribution to the FUD, right? There's an attribution to the fact that, hey, one of the newer ambassadors of Bitcoin, if you may, Elon Musk, came in and he suspected that, it wasn't the right instrument because of its, sort of negativity on the ESG front, on the climate change front. And then we had all this China FUD come in, and post that, of course, the market started collapsing and other FUDs kind of joined that party, if you may, right? And so we did see that collapse, but it's hard to attribute it. Sometimes, at least the way I look at it is that how much is each news item impacting the price action is a little difficult to tell, right? And you can, of course, try and run some basic correlation. If somebody ran a basic correlation against this price action, right, it would look like, yeah, it was highly correlated. All the negative news led to one candle after the other, right? And so, rather, one red candle after the other. So yes, they are definitely correlated, but was there causality is a difficult one to determine, right?
For sure.
So that's something to always bear in mind. Do remember another piece which totally baffles me. I'm unable to sort of wrap my head around it, is that one of the most celebrated things that happened in this bull run was the IPO of Coinbase. So, Coinbase
Yeah.
was like a poster child, big old exchange, right?
Yeah, it's almost a distant memory now. That seems like a very long time ago.
Yeah, exactly. And, Coinbase came in super strong, great narrative, almost to the extent that institutions, got excited with that, saying, hey, here is a sort of legitimate way to trade and invest into Bitcoin, and this is the future, and this is what financial institutions may look like, right? Like basically, kind of that sort of a promise.
Yeah.
But if you look at the data, it's actually reverse, because market top was exactly on the same day that Coinbase went IPO. That's it. The highest price achieved in this bull run so far of 64,920.69 was exactly on the day of Coinbase IPO, and after that, the market sold. If you look at just the immediate candles after that, nobody liked the Coinbase news. Even though it tried a next push up, day after day. In fact, this is probably the biggest set of reds. People are not studying this hard enough, but look at this. How many days of red? It's like 1, 2, 3, 6, 7, 8, 9, 10, 11 days of red candles.
With
That's like
just
a
one
very
green in the
bearish
middle.
movement, exactly after Coinbase goes IPO. Or whatever, direct listing. It wasn't really an IPO, it was a direct listing, which some people don't technically understand, but this is what happened here, right? And so that's an interesting one to try and digest, try and understand what is the market saying, right? Like, I don't have a confirmative analysis of this action, but it does make me very curious. It just makes me think, like, what exactly is the market thinking? Why did the market suddenly go super bearish on the most bullish news of the year?
Yeah, it was also interesting because that was the period where it seemed like Ethereum and Bitcoin were diverging slightly, in that Ethereum wasn't being pulled down by that correction in Bitcoin, and the ratio between the two was actually peaking near its heights. So yeah, it seems like there was perhaps more momentum into that kind of Ethereum and DeFi space away from Bitcoin in that first run. Definitely not the case in the second kind of fall there, where it's affected both equally, or in fact affected Ethereum worse than it has Bitcoin on a percentage basis.
Yeah, totally. That's actually a fantastic observation and a good way to read that. That maybe that's where the flipping happened, if you may, right? Like that's where the momentum started shifting a little more back towards ETH and DeFi, which obviously had a lot more momentum last year. The summers of 2020 is where DeFi happened. The price action on ETH was a little delayed. That we didn't see up until the bull run, but basically momentum on the ETH platform and DeFi was building through months, which I would personally think led to the this bull run. It was kind of the precursor to the bull run. It was warming the market up, right? And but there was a little lag. The first few months was all about Bitcoin. Everybody was sort of back onto Bitcoin. And then it seems like you're right. The Coinbase side is when the things started flipping. So it's an interesting story. It just is something to kind of bear in mind as we continue to look at the markets, right? Like all these instruments will be around, and we will continue to see some interesting price action. But that's something to factor in, something to sort of bear in mind, and not just let it pass. It is telling us something, right? This is what I think.
Yeah, and we're seeing that kind of 40K ceiling on Bitcoin. What are we seeing over on Ethereum? Is there a similar price point that it's trying to break up through?
Yeah, let's look at that. Yeah, so let's move to ETH. ETH is a slightly different story. Okay, first, ETH, despite its sort of correlation with Bitcoin, hasn't really gone as bearish as Bitcoin has. Okay, so ETH is still hovering between 50 and 200 EMA. That means, yes, the trend has become weaker, right? This is not a strong uptrend, but it is still a net uptrend. So if you really look at, just broad trend filters and say, where is the trend? Well, it's still above EMA 200. So from a mid to long-term dimension, it's still an uptrend. It's a weak uptrend. So that's something to bear in mind. So, it's not apples to apples. When people are saying ETH and Bitcoin both are crashing, both are burning, well, they are crashing. Both have lost a lot of their value since the all-time high, this bull run. For example, ETH has gone all the way down from, 4,300 to where it is today, 2,400, almost lost half the value, right? So all that is true, but considering that, given where ETH was, it's still an uptrend. It's still sort of up there, and it does have a lot of things going in its favor, despite the fact the markets are very choppy, the markets are very wobbly. So something to kind of keep in mind. I feel for ETH, the EMA 50 is what it needs to break. That has become almost like a barrier. So after that big drop, we saw some attempts to break EMA 50. This is long wicks here, right? The long wicks are attempts that ETH tried to just pierce through that EMA 50, right? But couldn't. So all this long wicks mean is that there was enough conviction, right? And one, we saw a bull long wick, which took it all the way. And then the second time, actually, the bulls tried even further, but this became a red candle. So it closed even lower. Then it kind of sharply fell after that couple of days, and a big green, again, a big push in favor. And then, some small candles, again, trying to breach EMA 50 and then back down. So I feel what is 40K to Bitcoin is EMA 50 to ETH. One should watch EMA 50 super closely. If it breaks that and goes up, it's back in super strong trend. If it's unable to do it, well, it's sort of a weakish trend, right? That one's got to see where it lands.
I mean, it's just peaked over at midweek this past week that it's been there, but then it's dropped back down. So does it need to stay above it for more than a day or two?
Surely, yeah. So this is what I would call a fake out, right? Like it broke out, but then the very next after that was a red, so it couldn't really hold, right? So you at least need 3-4 days of candles being held to show that there is still enough momentum, and traders are feeling bullish now and wanting to keep the price at this new price point, right? So we need that conviction. The other interesting part is currently the EMA 50. It's a little above that. The prices have fallen, so the numbers obviously are dynamic, but they're close enough to that 3,000 price range, right? So it's a nice, good feel of, hey, if it's close enough to 3,000, it's above EMA 50. I think it might bring back a lot of energy into ETH. It's possible. Okay. Now, another thing to bear in mind is where is the downside? Like what happens? So we've been looking at still EMA 5200, but nothing tells us that it cannot breach EMA 200. In fact, we also saw that, right, with the two big dips, they're long wicks, which sort of pierced through EMA 200 and looked like it was going to go as bearish, the same bearish way that BTC did. And this is something that I think we need to study. We need to see what happens. What's the bottom there, right? And the bottom could be various, any of these. The 1600, there is some sort of a level of support here from prior price action. At around 1400, there is some. And then, of course, it could go all the way down to even about 1049, where there is some support. And even if it breaks through that and we get into super hyper bearish territory over the next few months, then it could maybe go as far down as 750, right? The question, of course, is not going to just tumble down all the way there, given all the other momentum. So I think, yeah, I mean, there are two price points to keep in mind: EMA 50, EMA 200, and then close enough to that, the support around 1683, right? So 1683 to 3000 is really where ETH is right now, sort of chopping between, if you may. If it goes up, gets closer to 3000, I think this confirmation is getting back into some bullish territory. If it chops down and starts getting closer to 1600, 1683 that we have drawn here, or 1625, there are two levels of support close enough in that 1600 range, then we know that market's turning more bearish than it was, right? So those are the price points to watch, is what I would say.
Yeah, I think that's really good. While it's a very wide range, looking at the volatility that we're seeing there, even daily, I do think anything narrower than that isn't really kind of giving us enough information about which direction that the actual market's actually moving. So yeah, until we see it really either direction, up or down, 1600 or 3000 breaking out. Yeah, there you've got it, the average true range. So
Correct.
Over $450 per day there. That's an incredible swing.
Exactly. So this is a 14-day RMA, right? So it's been moving quite rapidly. If we even reduce it down to, let's say, last 10 days, maybe more volatile, right? So if we do 10-day RMA, let's see where it goes. Yeah, about the same, 450, 460. So it's still a lot, right? That's a lot of volatility in the market in ETH price. On a base of 2,400, essentially, it moves 450 every day, right? So that's a lot of swing, right? That's 1/6 its price really goes up and down every day, right? So something to bear in mind.
Also something for people who are playing perhaps arbitrage across exchanges and things, and with strategies that don't rely so much on the actual price action, more they can play on the volatility, right?
100%, 100%. There are plenty of opportunities, especially when market moves that rapidly and that violently. It leads to some interesting arbitrage opportunities. Arbitrage opportunities on the spot markets, right? Arbitrage opportunities, and when I say spot markets, means across exchanges on various spot markets. Arbitrage opportunities between spot and futures, right? There's usually a basis arbitrage that becomes possible, and then also arbitrage between futures markets, right? And the various dynamics and funding rates there. So for example, let's look at that a little bit. Let's peek into it. So Bybit is a good site. I like this because it gives you a good picture of all the funding rates across the major exchanges. And if you look at, for example, BTC, although it's super, with a short bias, right, a negative bias and a short bias at the moment, funding rates in many places are still positive, so that's kind of interesting. But you do see Bitfinex where it has turned negative, certainly showing the short bias, and then Bybit where it's negative. So some exchanges are sort of, maybe this is canary in the coal mine, right? It is just showing that people are getting more short in some of these exchanges, and then other places are things to watch. The way it sort of converges and evolves over the next few days. So that's something to bear in mind. I do want to mention. Yeah, sorry, go ahead. Yeah, Looks like you
Well, no,
wanted to
I think
chime in something.
that's
Yeah,
really
please.
interesting because we haven't talked too much about the different funding rates there, but it is
Yeah, we
quite
can
an
look at
important
this.
factor. So, and also is this able to show us the
ETH as
difference between kind of the perpetuals and what we're seeing on spot?
Yeah, so this does not, I don't know this way. I'm sure there is a way out here, right? But you can sort of derive from it, right? The expectation is that in a fair market, the underlying price or the marked price is tracking the spot, right? So that's at least an assumption. So assuming that's true, a negative funding rate is showing a negative bias, which is showing a case of backwardation, right? Where your future is priced under the spot price, right? And so there's a basis arbitrage opportunity here. Again, one will have to consider the commissions and other fees as a part of this to see, how much profit can one make. But it does show a inefficiency in the market. Similarly, when it's long, net long, right? You have a contango and a opportunity on the other side, right? And in some cases, in this case, for example, let's assume that the market is actually short, but then you have these markets, for example, FTX, which are still paying positive funding rates, which means traders on FTX are still thinking going long, net long on ETH in this case, or in BTC also you've got these exchanges like Binance and Bybit that are still net long. That may be an interesting one to arbitrage across these exchanges. Like you could, again, one will have to see the practicality of it, but there is an arbitrage between Binance and Bitfinex on the face of it, at least, right? One is on a positive funding rate, one is on a negative funding rate for the same instrument, actually, BTC USDT, right? So the same basis, apparently and hopefully tracking the same underlying um, index, right, for marking the
Right.
market valuation, but showing very different characteristics. So traders on Bitfinex and Binance aren't thinking the same way, and one is thinking net long, one is thinking net short. So there's an opportunity. One could go and arbitrage between the two possibly. Now, again, this is not investment advice. It's super risky. So anybody who wants to do it, you might as well know what you're doing, right? So understand and study the
Yeah.
perpetual market. Don't just jump in and say, hey, we heard this on this live stream, and yes, there is money to be made. There is money to be made, but there's also money to be lost, right? It's a risky proposition. So know what you're doing, right? And maybe trade some perpetuals, get familiar with it, understand how it works, if that's what you want to explore, right? So don't just jump in blindly. Also, for a lot of this arbitrage, I think automated strategies work better. That's at least, I think, right,
Yeah,
Paul? I
and
mean, that's what we've learned always. Yeah.
we've heard from a few interesting kind of algorithmic traders and quants in some of the interviews we've given, and we're interested to talk to more and bring that side of the kind of crypto trading world and educate people more about that through some of our other series as part of Going Elliptic. For today,
totally.
let's look at this ratio, because this is one that I've liked looking at between ETH BTC,
Right.
and it had also a sharp correction, right? Ethereum took a bigger hit than Bitcoin, but it's bounced.
Yes, and it is still, by the way, a very strong trend upwards in the sense that the relative value of ETH to BTC is in favor of ETH. So, this ETH to BTC is still above 50 EMA. And yeah, it's still trending with a wide gap here. I mean, we can also maybe plot 20 to see if it's really that strong. But let's see. So moving average exponential, and let's add another one, right? So this is a 20 EMA. 20 EMA usually depicts hyper bullish market, very parabolic move, because it's very short term sort of price action. And we did see, by the way, above 20 EMA, but it's not too far from 20 EMA, actually. It's tracking close enough to 20 EMA, which means the trend of ETH to BTC is still in favor of ETH. People are more bullish on ETH as compared to BTC. That's what this chart is saying.
Interesting. Yeah, I find that fascinating as a ratio. And yeah, I mean, there's not too much you can do with that at the moment from a actual trading perspective, but from maybe a higher level portfolio balance perspective of if you are sticking mostly to the majors, kind of what ratio do you apply between the two?
Good point. Good point. Absolutely. So I have one thesis here. Again, this is a little bit of a hypothesis. Okay, like most theses out
Sure.
there, it doesn't confirm with data. I just feel like I think it's a narrative difference more than anything else. I mean, of course, there's plenty of activity going on ETH and little of that going on BTC, right? Like all these DeFi and other stuff, which are all growth oriented and lots of sort of new innovation that's going on the ETH platform, right? We don't see that going on BTC, but I think the larger bit is also just the narrative. So my take is, and I've been trying to study this, just looking at a lot of different crypto Twitter personalities and reading up and trying to just put my own thesis around it. And I think I have a conclusion now, at least in my head. I feel that BTC started on a very positive narrative years back, where the idea was to give freedom, right? The idea was, hey, here is money
Yep.
that's free. It's across the world. You can use it everywhere, and it's inclusive, and so on and so forth. Right? The freedom was like sort of the underlying thesis, and that unfortunately over the last few months, especially more so over the last few months, with these newer characters coming in, like Michael Saylor and a few others who become bigger voice of the community, have really turned the narrative in a very fear-driven narrative. So if you really look at some of the videos, and I was just trying to objectively look at it, okay, not trying to take positions and say whether they are right or wrong, but just trying to analyze it, right? Study what that narrative means. And if I really parse it, the narrative really says, hey, doomsday is coming, things are going to just go crazy, just move to Bitcoin and save yourself. That's basically the narrative, right? And while there might be some element of truth, I mean, we've all seen the whole money printer, and then people getting scared about it and hyperinflation and all those things. And, in some economies, unfortunately, that's a reality, right? Some South American, African economies, they really suffered from that, right? From this hyperinflation stories. But it's still a long way for anything like that to play out, right? In larger economies. It can happen. It can happen. Nobody's saying it cannot happen. And yes, some of the current money printing and the wide gap between M1 and M2, which is basically the amount of money supply stuff, is kind of alarming. It's not fun. It's not something that you can
Yeah.
be happy about. But having said that, I think we as human beings like positive narratives. Human beings aren't tuned to the doomsday narrative. Despite some people trying to use it, I just feel like there's only so much capacity for humans to take negative narratives. Because there's so many things that are
Yeah.
negative around us, right? Like how much negative narrative will you do? Are you supposed to stop living your life? You know what I mean? So
Yep.
I feel
And
like,
I feel like we respond almost always too late. So if we get a negative narrative, we're more likely to delay action towards that until it's almost right on top of you. Whereas, yeah, positive narratives were more likely to be like, oh, why not? Give it a shot.
100%, 100%. And that is, by the way, a very normal studied consumer behavior as well, investor behavior, where people are saying that people are willing to take more risks and rally behind things that have a positive narrative, which shows hope, right? So people say, oh, yeah, I want the hope side, because they kind of in their hearts want it to work out.
Yeah.
Right.
Yep.
Most people want, even if they know it's like improbable or difficult, it's the same superhero syndrome, if you may, right? You want it to be true. You want it to happen. And in some cases it does happen, and it's very rewarding. And people feel like they have made a positive impact on the world and the journey and for themselves, and people feel excited and happy about it, right? But and people fear. It's not like fear is not a real thing. I think fear and anger are real, and it can bubble up. But if you just look at the last couple of years, in fact, I would say a little more than a couple of years, there's just been so many fear factors on multiple levels, health wise, society wise, monetary wise. I think there's only so much capacity. There's a finite capacity for every human to be motivated by fear, and after which they get numb. In a bizarre way, it reminds me of that comfortably numb song. After a while, it's like you don't care, it's okay, right? So,
Yeah.
so
And
that's the
so you're
thing.
feeling like the dominant narratives across Ethereum are more tuned to the positive future of finance, decentralized finance in a positive light rather than this kind of fear of collapse of the existing systems.
I think so. And I dug that deeper into it. I think people initially were also trying to ride on the fear wave, but they have really turned the narrative. And today, if you look at it, they are not talking about anything other than innovation. They're talking about, hey, traditional finance is bad, it's inefficient. Let's move towards a better future. right? Let's go towards DeFi. Let's go towards people's money. Let's make it more democratic. Let's make sure everybody can participate, right? And even the movement within ETH for that matter. Why is there so much movement, if you may, around trying to work on L2 or scaling or whatever? Because the idea is, let's get the gas fees down, right? Let's make sure it scales for everyone. Let's make sure it's more inclusive, right? And just the innovation, I think it almost goes in the same spirit where Elon Musk comes in and says, yeah, we got to go and conquer Mars. Humans are multi-planetary species, right? Or let's go and just change. We are not solving a car problem. We are solving the energy crisis problem, right? People like that. It's a very positive narrative. Nobody wants the planet to get destroyed. Nobody wants, misery around themselves, right? So it's a thing they can rally behind. And even institutions would rally behind it because, ultimately it's not like even traditional finance institutions are loving the inefficiency in their system, right? They would be happy to pass off more to the consumer if they can make more money, right? If they can
Yeah.
find better rails, right? Which is what happened with internet. Think of it this way: banking used to be personal, person-driven, teller-driven. It's all converted online, right? So that's like, I would call it Gen 1 of DeFi in some sense, right? Where things could become online. That also allowed for a lot of companies that were online only, right? Online
Yeah.
brokers, right? Online banks, and it led to innovation, right? And people could reduce their costs and do more kinds of businesses. So DeFi has that narrative, right? Not to get lost there, but I just feel that ETH is net positive, hope-driven narrative of late, and building very well on it. I think people are rallying behind it. Different kinds of people are kind of getting excited about it. BTC is certainly putting the right warnings out, but it's too much of fear-driven, doomsday-driven narratives, and it has finite capacity, and people are kind of spacing out on that, right? Especially when you see these extreme narratives from people like Michael Saylor, people like, I don't know if I want to be behind it, where he's saying, hey, sell your house, sell your mortgage, sell your company, go buy BTC. And at that point, he really literally said that, which I think is horrible. I
Yeah.
think like that's the dumbest thing a person would say, honestly, because whatever you want to do, people need to make calculated decisions. Don't try to push them down a cliff. And he's literally pushing them down a cliff. Even if that leads to heaven, I don't know. You know what I mean? So my point is that people like the hope, people like the calculated narrative versus, hey, go and do it now, otherwise you won't stay alive. That narrative. So
Yeah, and I definitely agree that that's been the DeFi narrative since summer of 2019. But sometimes it does get a little bit ahead of itself. Like we see total value locked, kind of getting up there towards $1 trillion, and people kind of going, "Hey, right, this could really be happening now, but perhaps there's still a lot more building or onboarding users or even onboarding institutions to happen before really that vision's realized."
Oh, 100%, 100%. I think you're spot on that. That we're still far away. I mean, the vision is beautiful, but to realize it, there's a lot that needs to be done, right? Yeah.
Yeah.
But anyway, the reason I brought it out is we're looking at this relative ETH to BTC, and one of the thesis I was thinking of, Paul, was that a lot of people are talking about flipping. Yeah,
Yep.
at least are entertaining their idea. It has been entertained in the past in a different way, but right now people are a little more serious about that thesis, right? In fact, even some crypto influencers who are very hardcore pro BTC are not talking about it, where they're saying, yeah, ETH could actually flip in BTC and become the primary and the biggest by market cap and adoption, right? I think adoption it already is to an extent in terms of the number of transactions and things like those, but just being like over and above Bitcoin, I have doubted that personally for a long time. I've been, despite the fact that I like ETH and everything else, I have doubted that. I've just felt like,
Sure.
not happening. Having said that, this narrative is making me rethink. I'm thinking if this narrative becomes more amplified over the next 6 months, 8 months, you know what? It could happen. This would be a bizarre thing, but this extreme narrative of Bitcoin might kill itself, which is very dangerous. But it's
Yeah.
that's what might lead to the flippening more than just the feature driven thing of, yeah, this one has this and that one has that. I think hope might just take over fear, effectively, in other words.
Yeah, the other interesting thing has been familiarity, right? So we definitely saw this in 2017, even though so much of the, kind of excitement and development was on Ethereum, people still knew Bitcoin. So that's what they would go, they would buy that, that's familiar. And then maybe kind of convert some of that across to Ethereum if need be. Whereas, now it seems Ethereum is much more of a familiar kind of cryptocurrency, and so there isn't such the retail drive to have Bitcoin first. They might just go straight to Ethereum.
100%, yeah. And I think where Ethereum has really sort of pushed the others aside are things like the Dino coins, right? So we might touch that very quickly, but Dino coins are basically out of the picture. They are not the biggest stock of town anymore. Things like Bitcoin Cash or Litecoin or others, because I think Ethereum has become that second to BTC, whereas some of those used to be second to BTC in the past.
Sure. Yeah.
Okay, so yeah, sorry, just jumping on. I know it's like an endless conversation. We can both keep talking about it.
We could talk for hours.
Right. But just in the interest of time and making sure that we address the things that our listeners want to listen to, let's look at the alts. Okay, so again, we'll not get super deep into this. The big story is they're all sort of tracking more or less the same way that ETH is. They are in some sense going hand in hand. So if you look at BNB, BNB is again sort of hovering between 50 and 200 EMA. BNB is a little more bearish as compared to ETH. ETH we saw was closer to its 50 EMA. This is closer to its 200 EMA, but at least has not turned completely bearish. It's the same set of investors and audience that like DeFi and ETH are probably also giving, showing their love to BNB. So it's not surprising. I was talking about the death cross that would happen with 50 and 200. There is sort of an analogous situation that happens when the market sort of loses its trend, right? Or a strong trend when 20 sort of goes under or crosses under 50. And this is what we saw here, right? So just showing in the near term, it has turned more bearish, which is true. We honestly don't even need this indicator to see it. The big reds tell a story themselves, right?
Yeah.
But yeah, this is what it is. I would expect this to be behaving like this for a bit, and just stick around this, I would say 0.618 and 0.5 fib levels. It's probably going to be a little range bound for a while until BTC and ETH find a direction. Once they find a direction, I think, then these could all move in their own independent directions and, find the future. Same with Sol, perhaps, I would say. Yeah, that's true. So look at Solana. It's Solana is kind of in the middle. Come to think of it, right? If you were taking the EMA 50 and 200, right? We saw ETH being closer to 50. BNB was a little down, closer to 200. Like tracking that, and Solana seems to be somewhere in the middle, more or less.
Yeah, and Solana still on those kind of actual adoption metrics has a longer way to catch up to say BNB or Ethereum. So it's a little bit harder to see what's not in the chart here in terms of are developers or applications really gearing up to do a lot more on Solana, or is it going to miss out on the action in this market cycle?
Yeah, 100%, 100%. That's a valid point. Solana, by the way, the 20 hasn't crossed under 50 yet. It's getting there. See, this is what BTC would look like today. In a few days. Yeah, maybe today. Exactly. This might just cross under. Definitely the next dip, another big red, and this is under, right? So that's what we are likely to see next week with some of the majors, especially BTC, unless, of course, things just go differently. Now, you make a good point about, by the way, Solana adoption. I must mention very quickly a small segue here. I was watching Unchanged podcast where there was, I think, Kyle Samani from Multichain, or the Multicoin. They are big believers, they're big investors in Solana, but obviously he was saying positive things about Solana. That's not a surprise, but I think he made a good point. He made a good point, which got me thinking, and I've heard this narrative from Definity guys as well, which is, when we look at developer base and we look at adoption, we always baseline with ETH today in the cryptoverse. And for good reasons, because most developers are in the ETH community or the ETH ecosystem for now, right? And the ETH tools have in some sense become the de facto crypto dev tools, if you may, right? And that has led to other people copying that, right? So for example, if you look at blockchains like BSC, the Binance Smart Chain, so exact copy of Ethereum, or even if you look at other ones like Matic, right, which is kind of like a bridge type of a chain, or if you start looking at Phantom or others, they're all trying to support the Ethereum tools. They all say, hey, you can run the same sort of smart contracts, right? You have the same sort of tools, you can use MetaMask, so on and so forth, right? Kyle Simani's point was that universe is so small. If you look at the total number of developers in the world, and look at the total number of ETH developers, and you try to find what percentage of total developers are ETH developers, and you rounded it off to integral value, it would be 0. That was his point, which I think is probably true. I don't think he's wrong there, right? Because if you look at millions of developers, let's say there are 20 million developers or 50 million developers in the world, yeah, if you start looking at it, they're probably less than, I don't know, less than a million for sure, maybe less than 500,000 committed full-time developers working on the Ethereum tools, right, or the Ethereum ecosystem, or smart contract developers. It's possible that number may be true. I haven't verified it, but intuitively sounds kind of right? And so his positioning was that it's the developers in the other side of the world, the 99%, not the 1%, that needs to be fought for, right? So don't try to just fight with the same 1% and say, hey, will they come to ETH versus Solana versus wherever else, right? Why don't we go and fight for that 99% and convert some of them over, right? And give them the tools that they are familiar with. Of course, his narrative was that, this whole sort of movement towards Rust is very potent and very strong. And I think we can really get some wins around it because a lot of C++ developers are going there. I've heard similar narrative from Dfinity where they say, the WASM and usual tools around web development are far more popular than somebody trying to learn new tools with Solidity, even if it looks and feels like JavaScript. And so, why won't people just use those tools? And therefore, we'll get developers. Okay. I don't know if it's true. Okay. And I don't know, Paul, if you have a view on this, you've also studied this up close, but that is an interesting viewpoint to look at, that we are not fighting with the same developers in the ETH world, but we're fighting with new non-blockchain developers to come to blockchain because blockchain is becoming a bigger piece of the pie. There's more money to be made.
Yeah, and I'd add another lens to look at that. I'd say if you're somebody that's a really competent developer that is financially savvy as well, understanding financial engineering as well as software engineering, and you haven't already dabbled with smart contracts on Ethereum, I think you're unlikely to start building DeFi-like applications on a non-Ethereum chain just because it's a more familiar language. So I feel like for the non-financial applications, yeah, quite a strong case there that developers who aren't thinking about financial engineering, they're thinking about all these other use cases where blockchain could fit, then yeah, they might gravitate more towards Solana or Dfinity, especially depending on the scale and the target audience. But if you're targeting that kind of, here's the new future of finance, I think it's still going to gravitate back to the Ethereum kind of tooling because so much of those pieces and examples are there so that you can really launch a new lending platform and not have to build it all from the ground up.
Yeah, totally. I think that's a valid point. It's a very valid point. So anyway, so we'll see this. We'll keep tracking this. But I feel that when we are studying the price of any of these, whether it's Solana or BNB or ICP or whatever else, right, that is related to this future of blockchain, if you may, or the rails for DeFi, anything that sort of is on that story, it'll be important to see where the developers converge, where the applications converge over the next couple of years. So I think the next couple of years, I think is going to be incredibly exciting. There'll be fight from all of these, and we'll see, does ETH get stronger? Does it become truly multi-chain? Do developers split multiple directions? Where do the new developers go? Where do new apps go? I think it's an interesting thing to keep an eye out for.
Yeah, it's still very early on, and I'd say there's even going to be developers who get burnt out with the chain that they've been on, say it's an Ethereum developer, and want something new, right? So it's got a lot of different factors in the evolution of that developer ecosystem. So let's keep an eye on that.
Yep, 100%. Okay, we are not going to cover this, but let's just maybe take a look. DOT is looking a little more bearish. As all we can see, it's below the 200. And then let's see Avalanche. It's a new one. There's hardly any data. I don't even know if it's worth reading this. But all of these have the same story. These are all platforms like we just discussed, right? Would you agree, Paul? I mean, they're
Yep.
all going to go the same way, and not all would succeed, but some of them would.
Yeah, and there's still not enough data on Definity with ICP either. So yeah, it's really hard to say what direction they're going to be going. But certainly, as Ethereum was still continuing to be bullish, some of these alts were able to follow that and kind of ride those coattails. Now they've got a lot of harder kind of resistance to push through.
Yeah, totally. Same thing I would say is even the story for Rune and FTM, Phantom, because these are all. I mean, Rune and Phantom are more cross-chain centric stories.
Yeah, trying to extend DeFi out into a broader sphere.
Correct, exactly. But nonetheless, it's the same developers that they need to attract ultimately, right? So it's the same set, right? And then I guess as applications get built out and more interesting applications available, users will converge, right, to those chains. Either they'll converge or not, rather, right? Now, I do want to look quickly at Matic. I know Matic has made all the news for all good reasons for them. Congratulations to them. They have been doing very well. I just want to quickly touch upon a couple of things on Matic. One is that Matic was all the way down beginning of the year. In fact, until Feb, it was hovering at 2 cents. Okay.
Yep.
And then they launched that whole cross-chain Polygon, 0x Polygon story, rebranded, and it started picking up. And then more recently in April, when the market actually started getting wobbly, is when Matic started going up. So there's a very interesting, metric to look at purely from a correlation standpoint. It was absolutely negatively correlated to how the rest of the market, and especially Bitcoin, was behaving. The more Bitcoin crashed, the more Matic went up. So,
and that just doesn't look normal, right?
no,
It's hard to justify that kind of kind of inverse activity compared to the rest of the market.
right, exactly. So some of it is sure, DeFi was still sort of staying strong. So yes, they are kind of the DeFi narrative, and there's a lot of momentum. So that kind of makes sense. That's all good, right? But yeah, some of it aggressively sort of going through such a large green candle. Just look at this. And then, of course, some rapid profit taking. There was a period when it crashed down also, some rapid profit taking. And then again, some big green candles. So it seems like this moves violently. Let's look at the ATR. I'm keen to look at it actually.
Yeah, that's looks like some whales or larger traders trying to push that around.
Yeah, so look at this. So this is like 0.46, and just look at the change, right? The change in ATR, it has just gone up. So it's a lot, it's like on a $1.8 basis, 0.4. So that's a lot. That's like 1/4 the value moves up and down every day. That's what it's saying essentially, right? 25-30% of value it swings through. So that's interesting. Kudos to them, though. I think they've done a lot of, had a lot of good success. There's no two ways on that. I think the question a lot of people are raising is as we start seeing more L2 solutions, right? And especially, I believe this Friday, right? A couple of days back, we had Arbitrum launch. And then, Arbitrum was received very positively. In fact, Uniswap, which always wanted to go with Optimism because of their own, I think, internal relationships, was voted in to say, let's go with Arbitrum first because Optimism is not yet ready. And, it was generally well received. I think Arbitrum is super positively received. And one of the questions was, well, Arbitrum doesn't have a token. So, as yet, right? So people can't go rally behind Arbitrum yet, but it seems like as we start seeing other tokens, right, which are in this sort of scaling story or cross-chain story or L2 story, we will start seeing perhaps some pressure on Matic. We don't know yet, but it just seems logical that that pressure might build up for them.
Well, in some ways, Arbitrum does have a token. It's just its ETH, right? It doesn't need a separate network token or a governance token for that matter. So, yeah, I think sometimes for the at least definitely for the ETH maxis, they'll appreciate that. But yeah, it's we shouldn't put a token into every layer 2 scaling solution if it doesn't need one.
Correct. No, absolutely. In fact, sometimes it's a pain, right? Because if you want to use any layer 2, then you have to acquire that token, right? And then
Correct.
you have to pay gas
Can
in
be a
that token.
barrier, right?
Exactly, can
Yeah.
become a barrier. So yeah. So maybe that's something that Arbitrum has done right, and they'll hopefully see some benefits of that, right? Especially from ETH maxis. They would love it. Okay. I think we will not cover more of the DeFi today. Maybe we pick that up next weekend, but I do want to cover a couple that were asked. Axes, where is Axes? So Axes is
There it is.
there you go. I think it's an NFT token. It's been around for a long time. When I say long means it's been around at least since last year. It was hovering around, like less than $1 few cents. Rode the wave of NFT. This I remember was the fib levels we had drawn back when I think we looked at NFT market as such, right? This was in March, I think, right?
Yeah, we looked at the full kind of NFT market and some of what we were calling the NFT spring, because there was a lot of mainstream attention coming in, and seemed to be doing very well. Obviously, since then they've gone to higher highs.
Yeah, much higher than since we last looked at it. But look at this. It seems like it has gone around the planet since we last looked at it. Right? It
Yep,
went up and down, and where is it now? It's at
to the moon and back.
0.618. Yeah. So it's really like retraced, right? From its all-time high of close to $11. Wow. It is all the way down, almost shed everything, right? It's hovering between 78% and 61%. 0.786 and 0.618 level. Kind of trying to, I would see, just purely from a price level, find a level around 0.618. The question,
Yeah,
I
we're
think
just
somebody,
drawing the 200 EMA as well. So
correct,
yeah, it's right in the middle.
correct, exactly. And the data is still not much. It's still a very young, token in that sense, right? Especially in terms of major exchanges. This is, of course, tracking the Binance pricing against USDT. I think the important piece to think through here is, I don't know if it's worth analyzing this too much until the whole market changes its music, right? So it's really all correlated at the end of the day, barring one or two that sort of don't behave with the herd, at least for short periods of time. I don't see this necessarily jumping out and behaving very differently, right? So expecting it to be hovering between 50 and 200 seems like from this chart is okay. That's a fair expectation. I would also think that I think it's trying to keep its stability around this 0.618 for now. So, if it holds price around 0.618, which is roughly its $5 price, $5.15, that's probably good for this token. And, then it might have a slightly long bias, right? Then you could start thinking like, yeah, maybe this is recovering. But if it's correct sharper and it falls all the way down to 0.786 levels, where it has tested a couple of times, by the way, 3 times, in fact, 4 times, right? So the big dip, the day after that, the long wick touched it, and then, again, the small correction, it came back. If it really happens again as the broader market corrects and is down below 0.786, I think this is going down with it. And I wouldn't be surprised if it lands somewhere here, the $2 or so, which was previous support, right? But all depends on the broader market. I think it's really at the mercy of the broader market. So here, right, I'm just drawing a previous level of support, which is at $2.18. And yeah, it could go there, right? So I think that's what should be watched. Where is it headed with respect to 0.618 and 0.786? And how is the broader market behaving?
Yeah, and also, there's the other market, which is the NFTs. What are those NFTs being valued at, and are people thinking of those in terms of ETH or actually US dollar values? And we still are seeing mainstream attention. The latest collection is Floyd Mayweather celebrating a few of his career achievements there with issuing NFTs. But can that kind of prop up some of the NFT tokens over time? Is that market momentum going to be enough, or are people thinking in terms of the dollar value of the artworks that they've purchased?
No, it's a great question. I think it's still a young market. There's definitely euphoria around it and a lot of energy that we saw during the spring, right? Early spring, the whole NFT spring that we covered. We also had, by the way, a newsletter on that. So for those who are interested, could go back and read it. But yeah, we don't know how that would look like in the mid to longer run. I think we need to study it. We need to figure it out where it's headed. In terms of Chili's, another one, I just want to quickly look at it quickly, just a few seconds. I remember this because Felix was on our show. Felix Hartman had mentioned one thing that is sort of stuck in my head. The Chili's valuation was more than the clubs whose fans it was trying to build fan pieces for, right, or fan NFT for. So that was interesting, and it seems like now they've added more to the bundle since then, but the price has actually gone the other way. So just something to keep in mind.
Yeah, I definitely think that now, this episode is about corrections. I do think that is a good correction or a healthy correction for Chili's token. It was, as you're saying, they're kind of ridiculously overvalued versus the amount of value in the fan bases it was trying to attract. So yeah, this is probably healthy, what we're seeing there, but perhaps still overvalued. It's very hard to say if, until you see more of that adoption from those new fans coming through.
Totally, yeah, that's true. So before we close, just a couple of things, Paul. One is, are there firstly any questions? Are there any fan questions or listener questions that are out there?
No, it's been a bit quieter in the chat. But yeah, if you aren't watching this live stream, you're watching it after the fact on YouTube or Twitter, do still drop us comments, reply to the tweets, or comment on the YouTube video, because we are wanting to make this as relevant as possible for all of you. So yes, if you're on the live stream this week, you can have been in the chat and requested things, but if you missed it and you're watching it your own leisure, do put it in the comments and we'll pick it up for next week's episode.
Exactly, yeah. And follow us on Going Elliptic on Twitter, right? That's the best way to reach out to us and tell us whether you agree, disagree with what we are saying. If you want us to cover something, things that you liked, do let us know. Follow us on Twitter. Subscribe to our newsletter, subscribe to our channels also on YouTube, and give us feedback, right? We're here and we want to be helpful. The second point, Paul, before we close, and this is something we already covered enough, and I want to hear from you. How do you feel about the market over the next 2 weeks? What's your general higher theme? Do you think it's going to go sideways? We won't know. Like, what are you feeling? Forget the numbers. Like, just something from what you're seeing.
I'm still feeling more sideways. There's just so much indecision in the market. People really are just waiting for something to shift it in either direction. And like we were saying earlier when we were talking about the majors, it's hard to even think what that something might be for a bullish or bearish case from here. We're kind of at maximum fear. What could switch people over to greed just isn't obvious. So it's definitely sideways for me. How about you, Shanky?
The same thing. I totally concur it. Yeah, I have similar feelings that there's just too much indecision, right? Like we covered it. It's just too difficult for anyone to take a stance, either hyper bearish or hyper bullish, right? So everyone's going to just look at the next person, the person next to them, to see where is the herd headed, where am I supposed to join? I think it's just one of those classic indecision periods.
Yeah, and I think that's going to keep this, high volatility, intraday, big swings. It's just going to keep going until it really moves either way. So
I think so.
Let's keep an eye on it.
Yep, 100%. Excellent. I think we are almost towards the end of our episode for now, right?
Yeah, I think that's a good point to kind of wrap it up. But we do these episodes each week. So yeah, please do subscribe and click the little bell to make sure you get notifications when we are streaming. And yeah, join us again next week for another episode of Charted and Going Elliptic. And
we're also getting some guests. I think we're just lining them up. We know it is the long weekend, and we didn't invite this one, but we again getting some interesting, amazing guests. So stay tuned on our Twitter account, and we'll let you know as soon as we finalize the dates and times.
Yeah, hopefully a more interesting panel discussion as well. Some of the past guests, bringing them in and getting their diverse views, because obviously We don't want this to be, just a monologue of just one view. We want to capture everything from developers to traders and investors. So it's going to be a good one.
Absolutely, 100%. Okay, with that said, I guess we're ready to wrap up.
Yeah, let's wrap up there. Cool. Thanks, Shanky.
Thank you, Paul.
Thanks, everyone. See you next time.